So it does stop in here. They come in here. They don't hold this little pull. There's a little thin spot or imbalance in this red. So you'd have to assume it's long up, down, and they hold it here. Now, I'm not going to be surprised if they even come up through here and they create some confusion. What are... Market's closed. Is that just the mouse move?
No, it's just your screen.
All right. I won't be surprised if we come back up in here and then just chop, because that's what happens. You get 3 bars back to back to back. Market's confused. It's not easy to trade this thing when there's not a clear comment or outlier. Never was. Gun to my head, buy or to sell it, I might just take the bullet. No, honestly, gun to my head, I'd say, well, I'll get short and then puke it above here and be mad that this one held. But I'm not going to take 2 points of risk. So this is a tiny, thin spot. And there you go. And so what would happen is I'd puke it here and it'll come back down and I'll get mad. But the whole thing is back to back to back bars. Is it a surprise when you get 3 of them like that? The market's confused. You didn't have a statement that had an outlier. And so you get people PO'd both ways. Well, here, just look at it this way. Forget about what you would do. What would you do to get out? Let's look at right, let's look at the exits before the entries. If you're short, you're wrong above this red line. If you're long, you're probably wrong below this series of greens. You could take this one, I wouldn't hold on to it this low. You just get an idea of where to puke it. And these aren't obvious stops necessarily. But you don't want to be short and have this thing as it blasts through here.
No, but we're pushing through that volume area that Dr. Dale's talking about.
Pushing through the developing V-part.
Yes.
Right, correct.
Look at the imbalance. There you go. Imbalance. Take out that red line, what happens?
We'll go to the next red line.
Well,
Let's look at a 12 PNF.
yeah, that's gonna, you'll like to see that.
All right, it'll fill in. 77 quarter. But that's the same as this one, isn't it? No, it's a little higher. But I could pull this down. Ooh. I wouldn't say it stops at this one if it blasts through. This one. This one's still a little close. Might have some energy to get in the 78 even area.
Yeah, 78.
Dave, what's the NASDAQ doing?
Like sweep all those.
Down to the top of consolidation, up to the bottom of the prior consolidation, banging around.
Up on the day or still?
It's still up there.
Here's the NASDAQ. I don't know if the settings...
Up 13. Huh.
That's bigger than a 6, I guarantee you that.
Yeah, it's an 8. You're right. These imbalances, I must have... I gotta change the settings on them.
Yeah,
There should be more red lines.
we're looking at 49.
Well, here's one. 50, 49, 50. That's good, Dave. And it's already worked a couple times.
Yeah, so there's 49 and there's a bunch of consolidation above that. So 49 is very static, push it towards the top of that next consolidation.
So that's the NASDAQ. We go back to the S&Ps.
The S&P is gonna be those 59s a couple more years.
Yeah, it's
Straight to the same.
called. Can't say called yet.
No, I wasn't.
He is on the ball. Dr. John's on the ball.
I didn't call it, the chart called.
That's right. There you go.
I can tell you, it's not, wasn't my opinion.
What a humble guy. Huh?
You read it correctly.
When I met... The difference is, if I tweeted it, people would like me more. Like, there's one guy that got a big following because he's a good... He tweets a lot. And it's like... Yeah.
You won't tell us when you're doing those anymore.
He won't?
Yeah, you won't tell us when you're doing those.
Yeah, periscopes?
Yeah. We like to give you hearts.
Yeah. I grabbed that string and just hit it.
I don't even know when I'm doing it, but don't you guys get notified?
No,
Oh, you need
I took you off.
Settings?
Yeah, I did. I took you off. I don't want to hear that.
I,
What would you say?
6, oh, I fed the, I don't know.
You usually make money on that there.
Yeah, well, I make because I'm disciplined not to trade when there's not direction or surprise. Like, no, I doubt I haven't done anything, honestly. I mean, obviously, it's now sideways to bullish, and your shorts are protected with this red line, but you're ready to get squeezed out. Yeah. This is the tough spot right in here where it comes all the way down, back, all the way up. But that's what I mean by the market is confused because,
But it's making it higher. Sort
and it's not the market confused, it's the traders who always want something to happen because something could happen with a statement like this. And when, going back to the owner of my prop firm, our worst days is when the outlier doesn't happen, and yet you're trading it like it did. And they just press and squeeze and get chopped, yeah. All right, let's take this off and do an exercise because we'll go back to it and see how it works out, Mark.
I have a believer now, disciple.
Hey, you could have him, John, and give him your phone number, and you'll have a friend forever.
He was so skeptical.
No, he's great. He's a good guy. I love him.
No, he is. And I believe that he could go through the same analysis now and tell you why it's doing what we anticipated it would do. Right?
Yeah.
Let's get out your folders.
I was supposed to memorize that, right?
Yes. Which is easy for you to do because you're so smart. Even though you're a pilot. Next session, we're going to have air traffic controllers, and we're going to have a trade-off between the air traffic controllers and the pilots to finally see who's smarter. The age-old question, right? I always hear one making fun of the other. And I'm in the middle.
Can't help it if they're idiots.
We'll find out. All right, I'm leaving this up because I don't want to show the screen. It'll give away. Now, don't unfold your paper. You guys,
Does everybody have one?
does everybody have it? There's 3 pieces. Pull them out, and they should be in order, so don't, just don't move them in the order you pulled them out. And there's 3 of them. The first one, Clayton, does the first one look like that? Perfect. Does your first one look like that? Perfect. Now, in the column, in the white column, you're going to write down your answers to these questions. And I wrote down mine, and then we'll go over it with this same image up on the projector. And the question is, a couple of them. Forget about number 3, that was just for me. First one is, where is a B2B bar, and is it bullish or bearish? Another one is long or short, and where are you wrong, and where would your profit target be? There is no wrong answer necessarily. There kind of is. But the whole key is there's no price or anything you're going to be able to say. Just do the numbers in the imbalance as far as where you would get in or get out, and we'll go from there. And we'll give you guys a little bit of time to do it, collect your thoughts, and you'll be fine. Hold on one second. Let's go to the image as it's complete. Let me blow it up a little bit. So here's my answers to these questions. And you could open up the page. The suspense is killing you. My answers were the 6th bar over would obviously be a bullish bar, or should be obvious to be a B2B bar, and it would be bullish. The answer for me, anyways, and again, there's not necessarily a wrong answer, but I try to get long somewhere at or around that 212 to 326 area, which is right in here, not because it worked, but because it's, remember, old resistance, new support,
Thin spot.
and a thin spot. So you got two things. Thin spot, old resistance, potentially new support. Where would I be wrong? Would be below here. Initially where I'd be wrong. If the market is not doing anything and doing anything, I might pull it up. But initially, this is an obvious stop for us, but it's not an obvious sell stop loser for the 5th grade little Johnnies. Profit target would be at this red line up there or underneath it, right? I don't know, you could get out scale before that, but ultimately that would be one of your targets. It could be your first, middle, or last scale, or maybe all in, all out, but that should be close to an answer that you guys have. Is that pretty much where everybody was? And if you weren't, that's fine. But let me ask you this. Was it kind of effortless to come up with that?
Yeah.
Perfect. Go ahead, Christine.
I was just gonna ask the logistics of, we say we'd like to get in around the 212 and 326 area. So I would put a limit order in there and say it doesn't come back that far and it starts running away from you. Do you then just get in and market? And then of course it eventually does come back to where you really want to get in.
Well, there's a lot of discretion there that comes with skill. The more skill you have, the more consistency you are, the better your discretion is. What you might do and what I might do might be different. You might say, I'm not getting filled, I'm not getting filled, I'm not getting filled, and jump, but not till up here. I might do it quicker, or I might not do it at all, and you might. It has a lot to do with you and your risk tolerance, your patience. Most importantly is have a plan of being consistent, such as if you're going to play it at this price, you would have got filled. How do I know that you would have got filled if you played it at this exact price? How do I know for sure you'd have got filled? Traded both sides. In order for the footprint to have numbers on both sides, this price must have went offered. If this price went offered, anybody bidding would have had to get filled, or you have a lawsuit. Should never go offer and you not get filled. But back to your point in question is the worst scenarios for me is to miss something or to have the price trade and not get filled, especially getting out for a winner. That's a gotta go buy another mouse moment. But that's me, where you just get mad if that happens a couple times in a row. You almost have a winner. You do have a winner. It trades at your price. You don't get filled and quickly goes back to your, cut your profits in half or goes back to your entry. There's no more frustrating than being right and letting that money get stolen. Now the mechanics. Remember I talked about mechanics and trying to be really good at not being sloppy, right? It has to do with when do you just say, turn that limit into a buyer, into a market order and just lift the offer and say, screw it, I want to get in. I don't want to be a you-know-what for a tick. Even getting in, you could say that. It's how confident you are. Here's another element to your question. You're not getting filled because you're 2 ticks lower and the NASDAQ takes off. Click, because it's in your area anyways. Does that make sense? Some new information that you didn't have when you had this information 5 minutes ago, 5 seconds ago, but there's new information that you have right now, and that was the NASDAQ took off, the bonds went down, the yen went down, a big seller came in and it couldn't go down, something to make you adjust real time. But at least you're in your area. You don't want to see that scenario and you're up here because that's too far away from where you originally want to buy it. Does that help with your question? Yeah. All right. The key is not necessarily getting it right, but the effortlessness in your recognition that maybe some of you would have had on Monday, but I guarantee you all didn't have this 2 years ago. Except Peter, because he's so damn smart. All right. Next sheet, in order.
You got the same question or new question? I can't see around the screen.
Hold on, there are new questions. Now I lost it. Is mine or yours? I lost mine. Let's see what your next one looks like, George.
It's a tricky one.
Oh, tricky one, all right. That's number 5. These questions are, what pattern do you spot here? Where would the B2B bars go? And after the last bar visible on your sheet, what would you do? Write it up. Write it up, even if it's simple. What's the pattern we spot here? Perfect. Where would, let's ask, Robert, can I ask you the second question? Where would a B2B bar go? Perfect. Let me put the proper image up. You could unfold the screen too if you like. Oh, sorry, Dave. That's not the right one, it's this one. Oh, we got it, we got it. So, exactly right. Long down bar, long up bar would definitely be the pattern that would jump out at you now. B2B bar would go where? I'd put it right there. And that's what Robert said. So long down, long up pattern. B2B would be here, which would make what? Transitional moment. Bullish, right? After the last bar visible, which was this bar, what would you do? Peter,
Well, two things I was gonna do.
let me give you the mic so you can.
I had two things I was looking to do there. I would probably look for a breakout through that resistance. If that didn't happen, I'd probably buy the retrace to support that 890 by 1053. I think that's your green right there, yeah. So that worked. Breakout would, well, wouldn't have materialized, so I never would have had a trade. Because it would have gone up and come back to retest the resistance.
So it's the second thing you said.
Right. Plan B.
Remember, you guys couldn't see this from here on.
Exactly.
Perfect. That's what
You taught me.
I would have missed the edge.
That's what I would have done.
I wanted a thin spot.
You got it.
No, I didn't. I wouldn't have gotten filled though.
Oh, all right,
I
yeah.
was gonna go one tick above that, and it didn't trade both sides, did it?
Well, maybe this green would have helped you be a little bit more aggressive. Maybe.
Oh, yeah.
No, it didn't. You wouldn't have got filled. It traded, but not both sides. It never went off, or you probably wouldn't have got filled.
I would've gotten filled.
Maybe you would have jumped it because you seen an ancillary move or something else. But it was still right idea, and there's less randomness. Now,
Stack green too.
where? Here?
It's a stack green.
Not necessarily stat. Well, it's not. It is. It's. This one didn't meet the criteria to make an easy bar, but you're right technically, or technically you're wrong, but theoretically you're right. All right, let's move on to the last sheet. Questions? A little different. I didn't write them on the board, so you gotta listen for them. The, are you willing to buy? If not, why?
No.
Are you willing to buy? If not, why? If so, where? So I didn't want to spoil this. Anybody still working on it? Collecting your thoughts? All right, I'm going to go to the slide. I didn't want to spoil it, but this now has become the infamous Trump Jr. email release that is the reason for this vicious sell-off in a very short time frame. And it busted through all these greens effortlessly and then did what it did. But let's go around with your thoughts. Clayton, what was your thoughts before you seen the rest?
What came before? I was wondering what came before here, because if these three green bars there, right, if that was some strong level
That's fair.
from
Yeah.
the last week or whatever, that might be worth
Okay.
a shot.
Who else?
I'll do it again.
George will do it?
So I would have waited on this one, unless we broke the two imbalances up above, those reds. Like the ones, on that same bar.
Yes.
Right there.
Okay, all right.
I would have looked at that. Otherwise, just because that bar is still there doesn't mean that's support. And obviously, this would have been my next area to look at.
But you didn't see that at the point.
No, but, well, I saw this
Yes,
one
you're
and
right.
this one, right?
You're right.
So I would have went down here and waited for something like this to, because I don't want to, I've fallen a knife or caught a knife too many times.
That's good.
There's no bullish transition.
There you go. So my answer was, and I gotta be honest, I kinda knew the result, but in the room, I didn't know the result, and if you remember this day in the room, I had told people, if you're not short in this bar, you gotta be careful buying this thing, and I'll let you know when there might be a transition, so bottom feeders don't have to get cleaned out, because they got cleaned out all through here. And the thing is that this doesn't look like it happens fast until you're watching it. These were quick losers if you're trying to pick that bottom and catch that knife. And I said, be careful. And in real time, we made this bar the first B2B bar. Number one, because it jumped with a green trail behind it. All right? Number two, it broke the first red imbalance in the whole sequence. So after the event comes out, which was up here, that makes us weak, we didn't get close. We tested this one a little bit and quickly rolled off. We didn't get close to any other red imbalances that we had on these EZ zones. This one gets not only taken out, but at this point, we know it's gotten taken out with some green. And I'm not saying you guys are crazy not to try to get long. I'm telling you that that was your best moment to then play it from the long side and pick that bottom from a probability standpoint. And I'm not telling you it at a seminar 3 weeks after with an image, but we did that live in the room and said, this is your best shot at this bottom being in. And we took back the whole sell-off, and then the overnight session the next day, rallied another 20 points. And that's when I had said, if the market, which is what? The real smart money and people who put money where their mouth is, they were worried about those emails being as big of a problem as CNN, we'd be down 50 points, not back to and through where we were. And I say CNN because they put out a blurb and said, market sold off 150 points. They didn't follow it up and say it rallied then 300. They're the ones that matter. And I tell people this in the room, don't listen to newsmakers on TV. They sensationalize. There's another word for sensationalizing. It's called lying. And their job is to make you watch. Watch the market. The market care about it? Then you should, if you're worried about it. Is it a big deal? Don't listen to someone's opinion on TV. It's a market reaction. It's where people are putting their money, right? Not their opinion, but also their money. People on TV are just giving you their opinion. So that's for this quick 3 exercise session. You guys need to do this more often. Not print out images. Think and collect your thoughts as to why you'd get in. Demo trading only allows you, when you demo trade, to show you bought it and you sold it. Doesn't give you good reasons and ways to record and document why. But you don't have to write a book every time you put a trade on. You got to be short and sweet with why, just like you had in here. That's why it was a condensed time in which you had, it was effortless, hopefully effortless reaction to what you wrote or thought about, but you didn't have a lot of time because you're never going to have a lot of time. Get your thoughts down, whether you're going to do it live or journal, but you got to make sure that you say, wow, that wouldn't have worked out if I tried to buy it, or great, I'm glad I waited for this area to get respected and I seen a B2B bar, and now you're going to get confidence. It's not random. Demo trading only gives you so much confidence. In fact, very little, because you set yourself up for making money in a demo account. The first week you lose money doing the same damn thing. You say, what changed? A lot could have changed. But your thoughts shouldn't, and it's a way to kind of track how you're feeling and what you're thinking. So with that, we're going to hook Trevor's computer back up, and then Dr. John is going to come in with me. We're going to have 2 projectors. Profile on your guy's left. We'll keep the footprint up on the right, or the center now. And the only rehearsing John and I have done is the overall concept of, okay, I'll show this and then you show that. We didn't go through very specific moments. We started to, and he had some circled, and then we said, you know, let's look at something fresh. So he pulled images from yesterday, and he's going to explain what he was thinking and what the profile was telling him, and then we're going to together drill down on what the footprint was telling us. Without any hindsight is 2020, and that's going to be better because you're only seeing and feeling the prep work being done instead of just it being memorized. Then I've got a couple more of those images, and we're going to put you guys in the little teams, and you could collaborate and come up with some ideas, and then we'll see what that comes out with. As he's doing that, when we do go to teams, here's what they're going to be. The pilots, you three will be a separate team. You three will be one team. You guys will be team 2. Clayton, you, Phyllis, and Robert will be team, and Bryant will be team 3. And just you and Jose will be team 4. You three will be a team, and Chuck, you're not playing. No, Chuck and Mark, you guys be a team, just 2. Is that all right? We're not doing that right now, but we're doing it towards the end. For you guys that are catching planes and everything, we'll probably be wrapped up between 3:30 and 4:15. Might go to 4:30, probably won't. And so you just got a sense of what we're doing. John, you hooked up? I'll use this mic. You could just stay with that one.
I'm sorry?
You just you use that mic, I'll use this one.
Fair
In
enough.
good shape.
No
You want to get up and then go with the profile first, and then?
Sure.
Perfect.
Okay. All right, since we're going with the profile first, let me just share with you how we came up before that opportunity, why we thought the market would go up after the FOMC. And it's been going up since we heard the announcement, and prices are still climbing higher. Okay. What we did was, basically, we broke up the value area of the prior day into quadrants. Okay. And we took a look and we found that the overnight low was within the top quadrant of the week. All right, bullish. Our anticipation was that we would come down for a retest of that low before we headed up. And the test, you know, it just came down, didn't even come all the way down, picked it up and started climbing higher. It hasn't really been moving with a lot of gusto, but the bias was to the upside. The first target was the developing volume point of control. It made that. Second target, we had a really narrow range today. Second target was the value area high for the day. It made that. And then it came back from it a little bit. And we have to wait and see sort of what's going to happen next. The important thing that I want to emphasize is there was really no trick. That's what the market was telling us. And the market could do anything to change that at any point. What we have to do is be flexible with our thinking and always take a look at what's happening in the market. And if things change, we change accordingly. And that's sort of what I told you, that, you know, it is not my opinion, that's what the chart's saying. And unless something happens to get us to change that, we'll stick with it. And that was basically it. So there's really no magic, no trick, just apply the concepts that we're looking at. All right. All right, here we're trying to identify potential opportunities. And then Anthony will qualify them for you. All right, so what do I have here? I have a value area high from the prior day at 90% of value. So this is an extreme level. Right. Now, right below it, I have a value area high of 70% for the prior day. And then I also wanted to give you context, so I put, and I had to magnify the chart so you can't see the full week, but this is the value area high based on 70% for the week. And this was basically yesterday's trading session. The magenta line is the developing volume point of control, and each of these bars is a 30-minute bar. So the first opportunity, well, the one opportunity I spotted was up here, and I'm going to take a look at a number of them, but this is one that we want to take a look at. Not necessarily the first one that presented itself, but this was a second test of this same zone. And now what we want to do is take a look at what was happening at this time in this zone on the footprint.
And this is 9 Pacific?
9 Pacific,
All right, so
right?
11 Central on mine. I already went down to the 25th, yesterday's session, correct, John?
Yes,
All right, perfect.
yesterday day session.
All right. And it seemed like it was up near the highs. So let's just go to 11, around 11 Central, which is going to put us in this area right here.
That's correct. Okay,
squeeze it
so
down
if
a
we're
little
looking
bit.
at price levels, we're above 278, below 279.
So if someone were to come into me and say, Anthony, pick a spot to sell it, and if you're wrong, I'm going to shoot you. I'm all right. At least now I know what I have to do. I got to find a short if it's a bearish type of setup on a profile. I'm looking for a short to come in. I'm not an egomaniac and tell you I'd sell it up here. I have no idea that I'd sell it up there. I have no clue that it's going to stop there for what I'm looking at here, right? I got to wait, and you guys think along with me here. I got to wait until I violate and get a B2B bar down and violate these greens, and then look at a short opportunity. I'm going to go through it one bar at a time here. Hold on. Now, we anticipate those greens being what? Support, correct? Until they're not. And they have been. They're setting the bottom of consolidation. So we'll take it line by line. First look at selling coming in, right? So I sit up in my chair. The profile got me ready.
Right.
This is getting me to aim.
And actually,
Go ahead, John.
we'll delve into this bar next. That's what we want to point out, that this ended at 9:30. So now this bar opens at 9:30, and that's really when the opportunity is going to present itself after 9:30.
Which is right here. This is 11:30 Central.
Okay.
What are the two lines on, looks like there's a green and a blue?
Yes. Okay. Very good observation. Okay. First of all, the green line is my 70% value area high, and my 90% is the blue. Okay? So my 90% and my 70% at the top are superimposed on one another. What does that mean? Because that has relevance. I'm sorry?
It makes it strong.
No. Well, it depends. What makes what strong?
The zone of resistance,
Yeah.
potential resistance.
Right.
The resistance is gonna
It
be
is
strong.
telling me that value has shifted to the upside extreme, and that the other end of the 90% is well below the 70% on this side, right? It would have to be. So value has shifted higher.
You're compressing into a ceiling.
Right, you're compressing into a ceiling, exactly.
Was it there at that time, or did that develop over the day?
Well, at the end of the day, this is what it looked like.
Right, what did it look like then?
What you mean, at that particular point in time?
That line there?
Definitely, that line would have been there, because this was at the high of the day, so we didn't develop much further than that. So this definitely existed when that was happening. If prices would have been higher, then yes, that would have developed earlier, but this was in fact there.
And the developing POC went on also, so.
Right.
Yeah.
And it seems that
Eventually it went up there.
the 2477 magenta line corresponds to Anthony's first green line.
2477 and a half.
Yeah, look where Anthony's green line is, it's like, it's so how
Okay.
you tick away, it's,
That's right.
Yeah.
Yeah, I was wondering if they overlap, but
Like
I
what?
can't see the.
I guess, makes sense, right?
Well, they're closer, within 3 ticks, yeah.
Your lines of volume drive, and that's
Right.
point control.
This is the 76 half area, his 77 half, exactly.
Right.
And it's holding the bottom of this rotation.
So the
Right,
key
1, 2,
question
3.
is, when do you get into this short, to take it to the short side,
Back to the footprint.
right?
The ready is the profile like John just articulated really well. I'm not doing anything. Right here, I'm just watching. The ready aim portion would be when I get first sell imbalance that maybe shows up and sticks. Do I sell it there? No. But I'm ready. Another one. I still don't have a clear B2B bar, but I'm thinking I could probably put one here, meaning right here, there. So I'm thinking I'm closer. I hear something in the woods. And, right, 11,077 and a half.
And you're also
Good
beginning to
recognition.
see some absorption up at the top with a positive delta. Do you see it?
Now, if I'm real bearish based on this, I have a place to get out. And everybody looks at a place to get in. Hey, I want to short, where do I sell it? Now, where can I find an unobvious place to get out if I'm wrong? So not the whole world is wrong. These reds are giving me that. So at any point now, I don't care where we get short in this area. I care about if I'm training a guy, where are you going to get out if you're wrong with this decision? It's above these reds. And you're either going to take it against these reds or you're going to miss it. I can't come in here and say, this is the one I'm going to sell. I'm going to tell you in this area, this is the area I'm going to sell. What else could happen? Any other real-time information that I'm looking at. It might have been that price, but I can't just make that decision on a chart. When you make the decision of this is the area and time frame I'm getting short, it's where did you recognize where you're going to get out if you're wrong with that short. And it was when these reds came in and when these pullbacks came to these reds to know ultimately you're wrong above here. What do you need to get this thing to the downside and really get paid on it is these greens that get taken out. Go ahead.
All right, oh, somebody had a question?
I thought Christine did. No?
No.
Well, go ahead, John.
All right. If you are an aggressive trader and you want to capture the move fairly early, there's a technique that I use because it allows, it's a low risk. My stop loss is exactly where Anthony identified it up here. But notice now what I begin to look for. A sell imbalance, 2 consecutive sell imbalances. I have one here and I have one here, lower than this. So I'm willing to begin the short up here even before I break those, and my risk is minimal. But
So
I have
you-
to have, so
you-
my confirmation is 2 consecutive sell imbalances below the absorption trigger.
Right. This could have been the second one, but you're right.
No, this is, no, this one, yeah, this one was before this one, right?
No, this is first.
Oh, this one was, there it
Yeah.
is, okay, there it is.
Either
That's-
way, you're in the right area
Right.
in the time.
This one I would not consider a second consecutive one. You know why? Same level. I want 2 consecutive levels lower. So now I have the wind at my back.
So it doesn't have to be in the same.
You see how I like to trade? I always want that wind at my back.
And you see, what's the high of the day? What was the high of that, the highest bar there?
The high of the day,
Roughly.
78 3/4.
So a lot of people think that if you don't sell at 78 3/4 or 78 even or catch the high, that you missed it. And if you try to offer 78s, the days you get are wrong, you get destroyed. You gotta play it. You gotta let the market tell you something. It's not always how high you sell it as the best short. It's the timing that the short works. sometimes a lower price is better to sell because your timing is a lot better.
So the
see
profile
the red?
identified the zone where I begin to look, okay? The footprint gives me the qualifying criteria of when I execute, when I enter. Yes.
So just to clarify your criteria, the 7850, we had 2 there, then the next one we skipped. Now you're resetting your qualification, is that correct?
No, I don't reset it. I already have the absorption. I needed an absorption
Right, you have
trigger.
the absorption up there, but you said you needed,
2 consecutive cell imbalances.
2 consecutive prices?
2 consecutive cell imbalances at levels below one another.
So it could be a skipped level.
Yes, but they need to be 2
Thank you.
consecutive.
Thank you.
It's just showing you have stuff behind you that's pressing it down.
Thank you.
You have the pressure.
Right, I'm getting the wind at my back. Always remember
For
that.
sailing,
Right,
for sailing.
for sailing.
I don't know why
Yes,
you
that's
like
right. That's right.
But you're ready was the close of that green bar where you got a circle. That was your ready moment.
Right, that was when I began to take notice.
Because it closed below that. 90%.
Well, no, because it closed above that 90%. And then I also noticed that volume was thinning out. 2 things. Above the 90%, and by the way, if you want these slides, I've promised to give everybody those slides, and I also promised to do something else, so I better do it before I forget, my email address. All right.
Yeah, we'll write that down. I'm not giving anybody any of my slides, so forget about that.
All right, well, we'll
Except Phyllis, I'm giving
we'll
Phyllis
write the
slides.
email a little bit later.
Just in my just moment of clarity for everyone, I can't stand here and tell you the exact price I can get short. It might have been here, it might have been there, it might have been here, but I can't tell you that this is when the first red I see is when I get ready to aim. I'm already ready, aim, and then the first moment of a B2B bar, I'm looking to sell little retracements. Could be this price though, guys, it could be that price, but you got a really tight area of when your timing to fire is. Ready, aim, fire. So at this moment, when I see this bar come and get retraced, and then at this moment it's pulling, it's like, all right, I see the deer. I'm either gonna miss it or I'm gonna hit it, but I'm gonna shoot. Most importantly, knowing we're wrong, in case it's Carl I end up shooting.
Thank you.
So, does that make sense to everyone? Bias from a profile and ready, aim when you see some selling, and some other things John mentioned, absorption, back-to-back imbalances, fire, because you know where the heck to get out, if indeed you're wrong. The rest is honestly easy. I got a 13-year-old son that can get out of the trade for a winner, right? Where would you get out for a winner? One of the targets would be down in here, whether it's for everything or
What
some of
level
them.
is that? What level is that green bar? Because I'm
74 quarter.
74 quarter. Okay, so all the way down to here. Okay. Yeah. See, I would have been out when I saw, and I'd have to see sort of what's happening when we get down to this low node here. Because now I have a high volume node followed by another low volume node. And I'm expecting a big move. I could stay in the trade, or if in fact I see it coming back up, I may take my profit and get back in at another point.
Through the whole thing, these top layer reds never get violated. Sure, this green is stubborn, holding the market up is the bottom of consolidation, but what happens when it finally gets through it and leaves some red? It's gone. Especially, it's like the probably 6th rotation in this whole sequence. This one was close, could have trapped some momentum, guys, had to take them out, but ultimately stayed underneath the red, really no bullish B2B bars, and then wham, once it's gone, usually the people who got short made a little bit of money, you know, did okay, they wanted 74s, they're out, and then it goes to the people who held on. And this level probably holds, let's see. It does for one rotation. For 2, for 3, it marks the bottom of this consolidation, so it's an excellent profit target without hindsight 2020. You want to go over another?
Well, okay, I just want to
Scenario?
point out that at no point was my stop loss ever in jeopardy. because of that absorption.
Yeah,
That's such a powerful trigger, you know, it really is something worth paying attention to.
ultimately, your stop was above, you know, after here
Right
was
there.
above 78 quarter and never even got close.
Right.
And sometimes we want to get, I mean, not every one of these would work, but at least you keep your knowledge of knowing where you're going to get out before you get in, and that's about managing risk.
Let's take a look at another one. All right, that's the one we just looked at, so, all right, here's another one. Let's say you missed the first one, and now you're in for the second one. You're going to find the same thing again, the exhaustion up at the top, 2 consecutive selling imbalances. See, I haven't even seen the footprint, but I'm going to tell you what you're going to find. Let's take a look at it, Anthony. This would be 11 o'clock
Your time.
West Coast, so you're looking at 1 o'clock your time.
1 o'clock?
Right.
Well, we still might be in that previous trade, but let's say we're not.
Yeah.
No, we probably, what was it,
Let's say we
74?
didn't take the first trade.
Let's say we took it, got out for a scratch or a small
Okay.
winner or a point winner, and we're still bearish, we're still looking to get back in, we're still looking to see another moment of when to get short. To me, and we kind of just went over this, it's when they could take this green out and still stay below these reds. Would be in here. And in all honesty, I might have gotten faked out for a small loser in here the way I trade. I'm looking for a breakout, didn't get it, might have scratched it, might even have made a tick or two, wouldn't have done anything good, wouldn't have been happy I took it, other than it's part of the game. But I'm looking for this green to get taken out. Remember, we're still bearish. We're looking for short trades. Forget about trying to buy it. We're still in the B2B bearish mode. I'm looking for this green to get taken out, period. So as a momentum guy, I want to be short around 76, 75 half to finally break out the bottom here. Now, retracements are fine too. Where would you sell a retracement up to? And not, you could say this red line, and that's fine, but you're wrong either above here or above here. Depending on how much profit you want to take. If you want to take more profit, then you're going to have to risk a little bit more. If you want to take small profit, then you don't have to risk as much. If you're really aggressive and really want to get sometimes trapped in the noise, you could risk at this red line. But what are you doing? You know, you're trying to get it below here and only risk 2-3 ticks higher. You're going to be part, you know, in a personal fast market, you start doing that. But you know where your risk is for this short, and you know what you need to happen to claim victory. It's to get this SOB below this green, and it'll run. And what does it do? It runs. So that's, to me, the entry is either trying to get through 76 or as close to this red as possible with a stop above it, and that's 77.5. So John, somewhere in this 3 or 4 tick area between 77 and 75 3/4, 76.
So when you said get in on a retracement, you meant when it rotated back up to the red zone?
Exactly. That's a pullback. Aggressive is you're trying to sell it when it's about to break out. Be a little more patient, let it come to you. Sell it towards the top of the range because you're bearish, right? Sell it towards the top of the range, which you're now better to identify, not because it's been put in, but because of these red lines now. Gives you better clarity of where to get out for a loser. And trust me, when you have good clarity of where to get out for a loser, you'll get a lot more confident in getting into trades by reverse engineering it. Go ahead.
Would you say that probably one of the most important points when you're watching this thing go by, you're watching the market profile, and you start watching the footprint, would you really want to kind of think, when you see this, is where would my stop be before you pick your entry?
Absolutely. I'm always thinking that, whether,
So that's your first
Instinctively,
target,
yeah.
that, and then where you would take.
and that's a good way to say it. Your first target is hit your first profit target. Where the hell to get out if you're wrong?
Yeah. it's
Reverse
your-
engineer it.
So if you can spot your absorption and say, this is where I want to lean on in case I'm wrong, and then
Right.
you can pick your entry from there.
Then it's easier because you're more confident you know what your risk is.
Yeah.
If my risk is above this red, and it's not going to be this red line, guys. It's going to be a couple ticks above it. But if you know where your risk is, and you know what your risk tolerance is, it's like, I don't want to risk from 76 quarter to 77 quarter. Well, then you're going to have to sell it a little better. It's outside your risk. The first thing I learned in trading and you were in Mickey's classes too, weren't you? What was the first thing he said? Know where you're getting out before you get in. Remember him saying that? And that was the exercise. All we would do is scratch trades just to get used to where you're going with it. A shortstop before it's hit to me, I'm going to first. Well, most people want to know where they're going to get out of a trade for a winner, because that's got all the sex appeal.
Right.
But think like a pro, and it's not how much money you make, it's how much money you don't lose. And if you make good decisions and you have skill, you'll make more than you lose. But all the retail guys want to see how much money they can make. We think about how much money we're not going to lose. Make sense? That's a good question, because that now becomes your first target, and that's well said.
But that'll also set up your contract size too. If you're only risking, if you want to risk 1% of your account, you can, instead of trading 3 contracts, you can trade 7. Because you've got
Yes.
such a small, tight risk.
Now you have flexibility.
Yes, exactly.
All right, there's something here that actually makes this a higher probability success trade than the earlier one that we showed you. Has anybody honed in on what that would be?
The double selling balances?
The double, I'm sorry?
Double selling balances?
Okay.
I think you say here.
Oh, here?
Yeah.
No, the double consecutive absorption. Last time I told you, we have the absorption, and then we have 2 consecutive imbalances. But in this case, I have 2 consecutive absorption levels. Take a look at them. I've got this one here. I've got this one here. Once I see this, and then I've got another imbalance below, I got the wind at my back. All right? And the absorption is more powerful than just a sell imbalance.
Do you ever look to get in on the pullback to the sell side imbalance absorption level as it
Yeah.
rotates back up into the
Yes.
into the higher levels?
That's what I prefer to do. But if the day is busier, it's not going to probably come back and give me that opportunity. Depends on the volatility of the day. I don't want to start selling the low of the consolidation on a very slow day. That's trying to trade momentum, and there is none. So I'd rather play rotations back to the top of a range with being careful on how many rotations there are and being quick to get the hell out, because I don't want to still be short straight in 78 in this sequence. So I don't want to, and this is hard for me to sell the 5th or 6th rotation, because the more it rotates up, the better chance it has of going through. However, you have to adjust to the context of the day. Some days, it just, because it's slow, it's gonna rotate 4 or 5 or 6 times. And when I say rotations, you guys know what I mean, right? Each time it goes, sets a high and rotates back down. But that's what's important.
I'm thinking of, some of your videos where if you're looking at that consolidation across the greens, or running across the greens and bracketed by the reds, if you drew a box around that area, a rectangle around that area, you see it bouncing up and down in between, okay? But you see those sell-side imbalance at the top of the range there.
Right.
Right. So as it rotates back up into that consolidation, use that as a trigger area to take a short from it.
Absolutely. Number one, because you're
And then your
bearish.
stop is only a couple ticks on the other side of it.
Right, because, well, number one, you got to remember that there's a different ready in this sequence than you might have seen in that video, right? The ready portion is a profile, some bearishness out of the profile. Yeah, so just playing, yes, we already got the, market has its bias, we're going to look to where to catch it. The reason why retracements, especially on a slower day where you're getting a bunch of them, you know why they're better prices? Because people who sold it down in here are puking it up to here. And then they're out, and so it's able to go back down, right? And vice versa. You know, people are trying to get short. So it's like, right, it's chop and it's a fight. Nobody has won yet until here. Now, I almost bet you that this becomes new what? What does this become? Absolutely.
How do you look the absorption at 76 quarter with the buying balances?
Where are you at?
At 76 quarter?
Oh, the price.
Yeah, right here, here, and here. Are you seeing that because of your bias, because of where you were up on Dr. Kepler's charts, that these are probably, if this breaks, it's gonna take out a lot of guys, a lot of stocks?
Exactly, that's why you eventually have that bar, it's just timing when it's gonna happen. When it happens, you're not surprised, because remember, we're bearish now. So that is, if I'm short with those guys down, if I'm short and that buy imbalances happen, that's when swear words come out, right? Man, I can't get them. If I'm short in here trying to get this bar to be, if I'm trying to get this bar to be this bar, you might get shook out if you're trying to fight it and getting chopped up. And you sit back and you look at the context of why am I trying to sell a breakout when it's not a momentum day and it's really rangy. You know what I mean? But you're absolutely right. That's what's solidifying this green is more imbalance. So when they finally lose, there's more people that are going to lose. So maybe it exaggerates the move, because why? More longs got to puke it.
Now, notice, if you follow the rule of the 2 consecutive levels, as I mentioned, you're not in until this comes into play, all right? And notice 2 things. All this stuff happened before this, and then the next thing I want you to notice is once my 2 consecutive imbalance or absorption have taken place, look at what happens to price. That 2 consecutive after the absorption rule is very, very...
Prior to this again?
This is the first absorption I've noted,
Okay.
okay?
Okay.
Does everybody see that?
Yeah. Oh, and so
Okay,
that's
where's my next one after this?
755?
Excellent, here's mine. So I have 1 down. I need 1 more. I'm sorry?
You're calling it absorption because price didn't go up and it has.
No, I'm calling it absorption because it was a negative imbalance with a positive delta.
Holy
Got it.
macaronis. That is flipping awesome.
You guys are
Right,
getting
write
good
that
stuff
down.
here. Yeah. This is really potent stuff. I mean, Trevor gave you the trigger. I gave you the refinement of how to really execute with that trigger. Yes.
I just don't see the absorption. I mean, how do you identify the absorption at that level?
Okay. All right. First of all, we have a sell imbalance. Would you at least agree with me that we have that?
Yeah.
Okay, very good. What is the delta between these 2 numbers? Subtract the 2 of them together and tell me, what do you come up with?
About 800, so
All right. Is it a positive number or a negative number?
a positive.
Okay. So I have a negative imbalance on a positive delta. How do you like that?
Well, no, not necessarily.
Not necessarily.
Not necessarily, because if you look at the bar, remember, all the prices are above and below.
No, okay. There's a difference between how I calculate the imbalance and how I calculate the delta. Let's not confuse the 2. All right? So the delta is simply the difference between the bid and the ask.
At that level.
At that level, okay? The imbalance is between this and this.
Okay.
Well, what would make you wait to get in here? Why wouldn't you get in anywhere in here? Because this is the second one
Honestly,
qualified.
you
to
want
be
the
anywhere.
honest answer to that?
No.
Experience. You don't want the honest answer?
Lie to me.
All right, lie. Okay,
So just experience anticipating the breakout.
exactly. And experience has shown me that if I wait for those 2 consecutive negative imbalances, or one of them could be another absorption, it will increase the probability of success for my trade.
And remember, you guys, you have to wait for a bar to get reopened, because this could change. It could be what Dr. John just said, but if it's still trading there, it's going to change. So you got to drift away from it to know that imbalance with positive delta.
You guys are getting really good stuff today. I mean, this is good stuff, trust
Factor,
me.
you're using bigger stops, right? You're not like Tony, he's out, if it goes against, doesn't like take
You don't have to take a big stop on this trade.
Well, big and small are relative terms, okay? All right, so
What
where's
kind of
my
stop-
stop here?
yeah.
Where's
Here's-
my stop
This is
here?
roughly your entry.
Right.
All right.
Okay, where's my stop?
The 2 imbalances get
4
taken out?
ticks, 5 ticks above.
No, I want you to point to the price level. My stop is right here.
Yes, 77.
The first
Half.
Is that 77.5? I can't read it from here.
These are
Right here,
77,
what's,
these are 6 3/4, that's
so
77
this is
half.
77, right here.
77.
My stop
One
is right
tick
at the
above it.
77. I'm not going to, if it goes on, south on me after these two consent, fine, I'm out. Then didn't work. Yes.
So when I look at this, I think that like after those sell imbalances, if those got taken out, you'd be wrong. Wouldn't you?
Yes, absolutely.
So why wouldn't you get out right after the sell imbalances were?
After the first one, for instance,
So you said you entered off of
I entered after this.
yeah, right there.
Right.
If those two sell imbalances get taken out, aren't you looking to get out?
Well,
So I guess my question
they
is,
may not necessarily get taken out, but you notice, for instance, that it did pop up one above that price. I don't consider that taking out this sell imbalance. It could have gone up another tick, but what I don't want it to do is to take out that initial trigger that led me into the trade.
aren't your
This is
double
probably-
sell imbalances the 88.22 or whatever that is, and then the 311 600? Isn't that your double sell imbalance you're talking about?
You lost me, I'm sorry.
So those two right there.
These two?
Isn't that your double sell imbalance?
No,
That's not your double
that's
sell
not.
imbalance.
That's not at all.
But they're two consecutive sell imbalances.
Okay.
So I guess I'm not
Okay,
following.
first of all, we have to identify our first absorption trigger.
Okay.
Actually, before that, we've identified our bias,
Right.
okay, because of what we see on the profile.
Right.
So now we're looking for an opportunity to go short.
Exactly. Yeah. I'm
The
following.
minute I see an absorption, my eyes pop up. I don't do anything yet,
Right. Okay.
okay? I'm waiting now to see where my next imbalance or absorption is going to appear. If I get two consecutive at two lower levels, they have to be both lower than one another, then I can pull the trigger. So let's see where those are. First absorption,
Then
okay?
you have another absorption right there, right?
Right there. That's my number one.
Right.
Okay, I do have another imbalance here. Does that count? No. Very good. All right. Why not? Thank you. Now I get this one. Does that count? Yes, absolutely. So now I'm willing to pull the trigger. Now, I know some of you talked about waiting for the pullback. By the time this happens, rarely do you get a chance for a pullback. So here's what I usually will do. I will put the order in immediately. Okay, and sometimes I may not even catch it. This will move so quick because the market, people who know this stuff know the direction at that point. Don't think you're the only ones that know that. All right, there are others, and the market will start moving very quickly, so get in quickly. Now, if in fact you get another opportunity and it pops back up for a pullback, sell another one.
But when they talk about pullbacks, they're not necessarily talking about a pullback to here. They're talking about these mini retracements back to the top of the range,
Oh, okay.
right? Anticipating this
Well,
breakout.
I mean, once I've made the decision here, there is a possibility it might pop up above me.
Right, and another thing is this imbalance, you make the decision, could change. It could go from red to green because it's still trading. It might not stay a positive delta. It's still fluid
That's
at
true.
that point,
That is true.
right? But
Right.
you know that these aren't fluid, they're already stamped in.
Right.
When you put it in, it's red, it's got that delta, it's got an
Very
imbalance.
good point. Good point.
So I just want to make sure I'm crystal on this.
All right.
So you have absorption, and then you have absorption again, but it's a sell
It
imbalance.
doesn't have to be absorption on the next two.
Right. Right.
But
Right.
it's more powerful if
If
it is
it
more
is.
absorption. Right.
And so you have that absorption or the sell imbalance right there.
Right.
So you're not looking for two consecutive in the terms of right after one another. If that's like, what is that like?
Right. This isn't,
625?
it isn't, this one and then that one is not the consecutiveness I'm looking for. It's one above it, one below it, consecutive levels.
Levels, and it doesn't matter how far in time they're spread apart. I mean,
Well,
to
yeah.
an extent. I mean,
In that zone, yes, it has
Right,
to be
yeah.
in that zone. You don't do it tomorrow and
Right,
time
yeah,
doesn't
yeah.
matter.
okay.
Could you define absorption for me and exhaustion
Yeah,
also?
that's what
Use
I
that?
have.
Okay.
You know what, let me explain it just
Sure.
to see
Go
if
ahead.
I understand it.
All right.
That's the best way I know if I understand it. So first thing is imbalance, you're gonna visually see it because it's red. A red imbalance, sell imbalance is red, right? Then, at the same price, this number is greater than where the imbalance took place, which would make a positive delta, because that's measured on the same price, which is whatever price this is going to the right. So this number, more aggressive buying than selling, but yet it's a red imbalance because this number is comparing to that number and that price. That make sense, Bruce? It's a red imbalance, but a positive delta on price. Okay, that's absorption, right? And then two of them would be 1, 2. You got to have a red number first, and then look at the number to the right. If it's greater, it's absorption. That's the easiest way. Red number with a greater number to the right.
Red imbalance on our green delta bar.
So then you have like absorption right there on the next bar over, for the 017, next bar to the left. Next bar to the left, right there. So that's absorption there too.
That's number 2.
Notice how I was able to recognize it.
Notice how you've absorbed it.
Exhaustion, what's exhaustion?
Now, on those two, you said there was 2 consecutive imbalances? Could that be on the same bar?
It depends on the size of the bar.
Well, not
yes.
bar, go across. I'm
Well,
talking
no, I mean,
bar.
let's say I was looking at a 30-minute bar. This stuff that you see spread out may in fact all be scrunched in the same bar.
Okay,
And yes, it could be on the same bar.
okay, excellent.
Sure, sure. But the levels have to be below one another.
So it'd be like, if we would see that right where Randy's at, right there in the very last bar, those 2 in a row. That's because you
Well,
do
I would have to take the cumulative effect of all that and see if in fact we would see it or not.
Are you trading 4 PNFs also, Dr. Ken?
Yes, I do trade 4 PNFs, sure.
And then what's
But
the
that's
cost?
not the only, I mean, I trade different time frames for different instruments. On the ES, the 4 PNF works really well.
Would you touch on exhaustion for us, please? What's
Okay.
the-
You want to do that, or do you want me to? Okay, all right. Exhaustion takes place when you get to a level in the market and volume starts to dry up. Okay. So you can see it here as well. Take a look at when we begin to add up all the volume at the level up here. Go horizontally now and add all these numbers. And then add all the numbers above it, below it, and so on. You will find that as we are dropping, volume is increasing. But at the top, we have exhaustion. The market really is not facilitating trade to the upside.
Thank you.
Would that be indicative of then smaller numbers at the top of a P&F bar as it goes
Just
along?
for that one bar. So it's showing exhaustion for that one bar. Notice, the last time we were in this zone, look at how much we traded.
Right,
The next time we've come back up into it, look at how little we've traded.
I see.
So if you compare those two together.
At the
yes,
same price.
At the same price, it tells you, yes, we're seeing exhaustion. When the market came back up there, it couldn't even trade more than 4. And it just dropped.
Volume taper.
Does that tend to indicate a reversal in direction?
Okay.
Or it's
Now,
sort of the
all right.
precursor to it?
That's a very good question. It does not indicate necessarily a reversal, especially on a PNF, on a PNF 4. You have to remember, a PNF 4 is a very short time frame. That's not if this was in fact occurring on a day or on a longer time frame, yes, I might say it's indicating some sort of a reversal.
Okay.
In this case, a modest retrace would be what I would describe. It's indicating that we're going to have a rotation in the other direction, a small rotation, a moderate rotation, but not a reversal. Reversals require much, much bigger.
Too strong a word, but it does indicate a temporary change in direction.
Yes.
Yeah, wonderful.
So now, the selling absorption, the third to last bar right there, no, next one to the left, right there, the 1558 by 1251, you saw that? No, to the right, down, right there, yeah. So Dr. Kepler, if you saw that, it's just a single one, would you question or, wonder about your short thesis?
Well, no, not really, because I'm not really ready to pull the trigger. I haven't had 2 consecutive ones. So conceivably, this may not happen, and I may see this come back up again. Remember, the market is very fluid. I'm not committed to it. This is why, in my trading strategy, I need those 2 consecutive levels. And that's why I told you, this is how you really know that that's going to work. But without that, you can make a mistake. Or it lessens the probability of success.
But that selling absorption right there doesn't, you're still waiting, so. the
Well,
fact
I'm
that
waiting
popped
until
up
this
is-
one happens. Notice how it broke through?
Yeah.
And then I had another cell imbalance, and actually, I have another absorption level there. It's a more modest one, but nevertheless, I do.
So as soon as you see that, you'd be sitting there clicking on sell a market, right? You just hit the bid, right?
Yes, I would hit the bid, I would be buying, I would hit the ask to sell. I would be shorting,
Yeah.
right? So I wouldn't hit the bid, I would hit the
Is
ask.
he, well, hit the bid if you're going to aggressively sell. Would it be a market order or a limit order?
Oh,
is what
I
he's asking.
see, okay,
Yeah, I
all
was just
right.
saying a market order, because I guess I'm thinking, like, as soon as I saw that second imbalance, I'd be like hitting, I'd just be aggressive. Is that not the right way to think about it?
Well, it depends on some instruments move very quickly. Others have a little bit of fluctuation, so it might go up, and I might put it on the ask, hoping to get a fill. If I really want to be aggressive, you're right, I would put in a market order, especially if I was expecting a strong move. And I've seen, for instance, that the market tested this before. This is the second test. It's failing. So there would be a number of conditions that would make me a little bit more aggressive than, say, when I would be looking at it over here. So you have to take a look at the context of everything.
And you also have to review what you're doing. If you're missing a lot because you're using limit orders, use market orders. That's what's important. You got to look at, I'm missing it and I'm going to tick away market orders, or I'm giving up a tick and I don't need to.
The beauty of these types of trades is that when everything sort of aligns nicely together, the trade flows very smoothly and very quickly. I intentionally gave you this one first because this was not an optimal trade, but it still worked. You see what I mean? But for it to have fully worked, look, you would have had to wait another 30 minutes, another 30 minutes, and then it really sort of manifested here. So we're looking at about an hour and a half before you really see the result.
And psychologically, you get in that last hour and you're starting to think about what you're going to do after.
Exactly. So that becomes rougher. And notice how I told you, now that we're looking at this trade, what do you see differently that makes this a better trade? And that's sort of the skill that any, I want to say professional, but let's say rather than professional, any seasoned trader needs to acquire, to qualify the trades, to know when one is better than the other. I mean, there's an opportunity there. As I mentioned, there are always opportunities in the market, but we have to qualify them. And based on what I'm seeing, I take the optimal ones. So it wasn't that there wasn't a trade to be had here. There was, but it's not as nice as this particular trade. And can you see why? Can you see what makes one a little bit better than the other?
In the context of all this, none of these trades look great. I mean, you make.
What do you mean none of these trades look great? What do you want, man?
What do you want, 10-point winners? You're right, but you got to put it, you might be right, but you got to look in the context of that session. It's a slow day. It's the middle of the summer. Right. You take what the market gives you, you don't force. Or you don't trade. If it doesn't look great, that's what makes a market a market. And that's, hey, and that's probably the best thing
Sure.
for you.
Right, because if it depends. If you're looking for a short-term trade, or that works well. But if you're looking for a position trade, you would be using a completely different strategy. So again, you have to look at the context.
You could.
Sorry?
If you're swing trading, would you use any of this?
Absolutely, absolutely.
On different
First
time
of all-
frames
First of
would be
all,
my
the
answer.
concept of absorption I would use. I would use it on a completely different bar. I certainly would not put a swing position on a 4 PNF. I would be out of my mind to do that. Okay, never do that.
What would you use?
I would use at minimum 120 minutes, at minimum. 120-minute time frame. And then I would use the same rules. Maybe if I was looking on 120, I would look for more than 2 consecutive imbalances. I might look for 3 or 4. You see, because I have a bigger range to get that level of comfort. So I would have to modify the strategy according to the time frame that I'm trading. But the principles are the same. Remember the fractal nature of the market? It isn't about one size fits all. So, not everybody will trade the 4 PNF. There are many other periodicities, bars. There are people that may use a completely different strategy. But the principle of absorption, you will see in any time frame. You will spot this on a monthly chart. And that's when it becomes really, really powerful.
Implementing a bad strategy consistently is better than implementing a great strategy inconsistently. You'll get to this stinks quicker. And you'll lose money in both because you're inconsistently trading a good strategy. You're frustrated. You're chasing. You'll make it from good to bad. Be consistent with something. Stick with it. Then you could quantify and qualify that it works. Let me add size. That it doesn't work. I'm missing something. It's people stay with the same stuff that doesn't work and they don't realize it because they're missing so much and they're inconsistent. So just make sure you're consistent. Be consistently bad is better than inconsistently good. I could work with someone who's consistently
It's a
bad.
good setup. Like in the NASDAQ, this kind of trade could go for, you know, eight.
Well, I will tell you, this kind of trade, short-term on the NASDAQ, you will not be fast enough to execute it. I can tell you that right now.
Want to bet?
You can do it, you can execute. I
You're damn
can't.
well right I can.
They move so quickly with the NASDAQ, it's really hard to get in quickly. I'll have to challenge you to that race.
But I'm not saying that it's for everyone though. That I agree. But yeah,
Breakout in the NASDAQ. This
I catch it.
happened quite a bit.
If I'm anticipating, I'll catch it. What's that, Peter?
Really?
Thanks, Peter.
If you do it in the NASDAQ, you'll short it higher, because it'll give you the finger at the top of that.
Gonna give you the head
Dr.
fake.
Capel, let me tell you something about Anthony. He's the only person I know that takes a shower with a water wiggle.
When it rains, I don't get wet. I'm so fast. All right. Let's take a break, 10 or 15 minutes, and we'll come back, do a couple more,
Do some more.
and then take us to the finish line. Good segment, though. Good segment.